All right, so we are good to go here, and I'm going to talk to you guys today about stock charts. So, how to read stock charts. So, if you're new or whether you've been around to trading for a while, reading charts, price action, it's really the most important thing when it comes down to trading. So if you're not sure how to read a stock chart, then having the strategy or whatever strategy you put behind it, if you don't know the charts, support, resistance, patterns, candlesticks, trend lines, if you don't know that stuff, then your trading style is not going to be effective. That's when you're just basically trading blind. Or that's why a lot of people, new people that come into the industry will say, oh, well, trading is risky. Well, it's risky if you don't have a trading plan or a trading strategy. So there's a lot of people that'll say, over 90+% of traders fail. Well, that's not true. It's 90% of people that come into the industry of trading without a plan that fail. So how do you have a trading plan? It's basically you got to know this stuff, or you got to learn charts and patterns, support, resistance, risk management, so you can put that into place. And then once you develop your trading style and your trading plan, that's what helps to set you up to be a consistent trader long term. So some of the things I'm going to talk to you about in this video are traders and how they leave important clues that you cannot hide from a stock chart. I'm going to talk to you about fundamentals, technicals, certain trading tools that can be a benefit, and how we have some resources, ebook, wallpaper backgrounds that'll really help to bring candlesticks and patterns to life for you. Get that stuff into your conscience. And is it conscience or conscious? Conscious or conscience? And subconscious? I forget which one it is. So these resources will help you'll be able to understand candlesticks. That's what I got to say. Risk management. So how to properly we're going to touch about risk management strategies, support, resistance, trend lines. And then I'm going to show you several real world examples. So I'm going to start in the beginning and kind of touch on some of the basics. And then I'm going to get right into drilling into stock charts, looking at patterns, reversals, trend lines. I'm going to show you some real world charts and how it all kind of plays out. And then I'll give you access to how to download our ebooks and wallpapers. And then you'll find out how you can learn this stuff live in a real environment. So, right off the bat, traders leave important clues on a stock chart. So you can't hide buying and selling from stock charts. So it doesn't matter how rich you are or how much money you have. You could be a multi-billionaire or you could have $5 to your name. If you buy and sell a stock, all of that comes together and forms patterns on a stock chart, right? Forgive me, guys. I take a lot of sips of water in between this because my mouth gets dry. So there's the battle between the bulls and the bears, right? Bulls are ones that go long. So if you go long, you're bullish on a stock. If you go short, you're bearish on it, right? So it's the battle between the bulls and the bears, which forms candlestick patterns. So candlesticks show important support and resistance levels, which ends up showing things like trend lines, right? So horizontal support resistance levels as well as trend lines. And this shows potential buy and sell zones, right? Now, it's important to know that not all patterns are perfect. So, you'll see one pattern, that might look like one thing, but it ends up being another, but they tell a similar story. So for instance, bull flags and bull pennants, right? One might look like more like a flag, one might look more like a pennant, but they're still telling you the same story. So I try to tell people, don't get caught up too much in the minutia. That's the word I like to use, minutia of things. Look at overall what's happening and don't kind of, say, well, is that a flag or is that a pennant? Well, is it telling you the same story? You know, is that a doji or is that a spinning top? Similar story, right? Possible reversal. So again, candlesticks are helpful guides, but nothing is foolproof in the trading industry. I wish it was. I wish there was 100% way to make money in the stock market, but there isn't. All right. And this is where risk management is key. I'm going to touch on that with you, but you know, again, this is where it kind of goes back to what I was saying earlier. It's 90+% of people that attempt to trade fail. Traders that have a plan are the ones that end up being successful long term. How do you have a plan? Learn price action. Price action is king. It's formed by candlesticks, patterns, and these trend lines. All right, so bullish bears, we have an ebook and wallpapers. I'll give you guys the link at the end for this, but you'll see kind of just right over to the right there, really custom made, really nice wallpapers that you can put on the back of your computer, right? And your desktop backgrounds. This stuff really helps to kind of get into your, again, I don't want to say the word conscience or subconscious. But I said that, you know, the more you look at the stuff, the more real that it becomes. And it takes a while, guys. You know, the candlesticks, they take a while to learn. But the more you look at this stuff, the more you help to overcome the learning curves of trading. So with our ebook, you know, I suggest, and our wallpapers, go slow with candlesticks. Don't just jump right into them. We have a couple of courses as well. So we have our ebook and our courses. We recommend to take our candlesticks courses after you've taken our beginners course. So if you're brand new to the stock market and trading, take our beginners course first. I'll give you access to this at the end, depending on where you're watching this. If you're in our course watching this, our beginners course, I'm going to put this video in our beginners course. You'll have the resources back there on how to get our ebook and our beginners course. But if you're not and you're brand new watching this right now, I'll give you the links at the end of this video. So take our beginners course first if you're brand new, right? Then after you've taken our beginners course and you know the foundations of, you know, kind of getting started and finding your trading style. See, that's what we teach in our beginners course. It's all about breaking down kind of just, I wish there was some easy way to say, you know, if you're new and you're coming in, oh, hey, where should I go? Right? Where should I trade? What's the best trading style for me? Well, there's several questions that you got to ask yourself first to help determine your trading style. It's not like, oh, let me just jump right into trading, right? There's your lifestyle, your circumstances, how much money you want to make trading, how much money's in your brokerage account. All of those things are a factor which helps to determine your trading style. Now, again, many people start off trading one way and then develop or go to a different trading style. That's very normal. So again, after you've taken our beginners course, you should be able to kind of have an idea of what your trading style is going to be after taking our trading course. And then that's where you're going to want to go into the trade room of, you know, that fits your trading style, and then take the courses that go along with your trade room, right? After you take the courses that go with your trade room, that's when you want to start getting into candlesticks, right? Go through our ebook. Now you can look at it while you're going through our courses. I just don't recommend jumping into it before you've taken our beginners course and learning a trading style, because learning candlesticks and all that go along with it, if you don't know what your trading style is, you know, you can take it in conjunction with it as well. So if you want to, you know, do our courses and then, you know, watch a couple of videos a day here and there in our candlesticks course and kind of go through our ebook, you can go along with it, but make sure you don't jump the gun before you've taken our beginners course and the courses that go with our trade room. And so this is the stuff that we teach. What I'm about to go into and really in depth is stuff that we teach every single day on our live streams within our Discord. If you're not familiar with what Discord is, it's the central hub of our trading community. It's amazing where you can go in, you can talk, So we do our live streams each day. We also have chat rooms and voice rooms where you can type chat your questions, talk to other community members via type chat, or you can go in via voice chat and talk via voice. You can ask questions, talk with other members, so it's very interactive. We have a whole Discord that kind of brings this stuff together, and we teach this stuff live every day in our trade rooms. So fundamentals or technicals. If you're brand new to trading, you probably heard the term, or you may have heard the term, stock fundamentals or technicals. Some people that may be new might say, I've heard that technical stuff. That's a bunch of hocus pocus, right? There's some people that are just like, you got to research a company's financials and the events, and that's, buy and hold long term, right? Great strategies, fundamental traders doing, research on a company. We always recommend researching a company's financials. It's good to know that stuff. Fundamental traders are typically, again, not always with what I'm saying here, but they're typically more of those buy and hold long-term kind of traders. And then you have technical traders, right? Those are the ones that look at the clues left behind by fundamental traders. And they're typically, buy and sell traders. And this is where, you can do short-term or long-term trading strategies. But this is the case I like to make. This is where it goes back down to you cannot hide what happens. All that buying and selling on a stock cannot be hidden from a stock chart. So to know where the potential areas on where to buy and sell, it's great if you know all the fundamentals of a company. But let's say Apple stock is great fundamentally long term. And then you're listening to some news program or station that says, Apple's great long term. Apple's a buy, right? I'm not telling you Apple's a buy, but I'm just saying, let's say someone tells you Apple's a buy. Great fundamentals long term. But then what if you buy high? And then after you buy, Apple just drops and you lose a lot of money for a while. Now, sure, Apple may go up long term, but it's not fun to buy something and then have the stock drop on you. You want to know, ideally, you want to buy low, right? So you want to buy low and then sell high, right? You want to make money in the stock market. So the technicals, if like I said, all that buying and selling that happens leaves clues on a stock chart, which are candlesticks. And those patterns show you, they're very helpful to show you potential buy and sell zones on a stock. So it gives you the areas on where you would potentially buy and sell. So now if you know the fundamentals and you like that stock long term, now you want to know the technicals on where to buy. So if you put them both together, what a great combination of a company's good long term, and then nothing's foolproof, but a good idea of where you might want to potentially buy, and then have exit strategies too, right? Are you just going to buy something and hold it forever? What if there's ways that you can make money where you can buy, sell when it goes high again, wait for it to come back down, potentially buy again, have it go back up again, sell, buy and sell, buy and sell. That's what you can learn with trading, different trading styles of areas and where to buy and where to sell. And you can profit by the ups and downs in that stock. So a few trading tools, like with anything in any career or profession, it is helpful to have tools at times that can help you to get the job done right. If you're brand new, don't just jump in and start buying tools randomly. These are good for when you're ready to kind of, start digging down into trading. And not every tool is conducive to your trading style. Certain tools are better based upon your trading style. But Trade Ideas, TrendSpider, Benzinga, Investors Business Daily, those are a few tools that we really like. Trade Ideas for a stock scanner, TrendSpider, amazing for doing some of the stuff I'm going to show you in this video of automated trend lines, technical analysis. It's a very, very helpful tool. TrendSpider is really good for pretty much any trading style. Benzinga, really good for, breaking news on a research platform. And then Investors Business Daily, really good for a stock investment and a research site. So, risk management. Man, it's one slide here, but there's so much behind it, but you can kind of take really what I'm going to say, and you got to put it to your trading style, but I can't stress enough the importance of it, that one of the biggest reasons that most traders fail is because they don't know how to manage their risk when trading. Trading is risky. There's no other way around it. Just because you can't predict what a stock's going to do 100%, it doesn't mean trading can't be very profitable and a really good strategy. Many people do this for their careers, but the way that you do it is by managing your risk, right? So when you learn fundamentals, when you learn the technicals and you put them together, when a trade goes against you, because it will, there is, again, no 100% foolproof trading strategy. When a trade goes against you, you need to be able to cut your losses and keep them small. Stop losses are very helpful. We kind of recommend or suggest that a mental stop is very, it's ideally if you can press that buy and sell button yourself without putting that stop loss into the system, it's typically better for you, right? Not going to go into like the whole depths, but your orders, when you put them into the system, market makers can see them. Not saying they trigger them on purpose. I'm sure they wouldn't do something like that, but let's put it this way. If you press buy and sell yourself, you're the one that knows when you're buying and selling, not somebody else. If you can't do a mental stop loss, then yes, consider putting a stop loss into the system. But ideally, you want to try to learn to develop the skill set where you're pressing that buy and sell yourself, right? So with risk management, you ideally want to look for at least, this is not foolproof, it's a guide, at least a 1-to-4 risk reward ratio, right? So that means risk, let's say $1 for the potential to make $4. Kind of, let's say, again, that's not perfect, but let's say a swing trader, right? Or risk 10 cents for the potential to make 40 cents, kind of like a day trader. So when I say risk, that means you've done your technical analysis. You can see, the potential, because nothing's guaranteed, on where a stock could potentially go. So you would risk your stop loss. Let's say if you have the potential to make $4 or 40 cents, you would put your stop level, also looking at candlesticks. You don't have to just put random numbers out there. You want to look at patterns and areas and stuff like that. But ideally, 1-to-4. Some people will do 1-to-2. Everybody's risk reward is different, but make sure, bottom line is, you have the potential with doing technical analysis to make more than what you're going to risk. So let's talk about horizontal support and resistance levels. So ideally, what you want to do is find as many horizontal peaks and valleys on a stock chart as possible. Now, peaks, otherwise known as ceilings, are known as resistance levels, and valleys are known, or floors are also known as support levels. So I say peaks and valleys and floors to give you a visual, right? So everybody can know of a ceiling and a floor in their house. But, it's commonly known as support and resistance. So peaks and valleys are formed from the battle between the bulls and the bears, which forms candlesticks and patterns. Now, price action, which is formed by candlesticks, is king. Indicators are helpful. They're good for confirmations, but many times they're lagging or they are delayed. So if you're new, don't just put a whole bunch of indicators on your chart and bog down your chart and then give you analysis paralysis. So they can be helpful, and there's a time and a place, but don't just bog your charts down with them. So the whole key with the stock market, just in general, buy low at support, sell high at resistance. Just a little tidbit out there as it's coming to my mind. You ever wonder why, when you're told areas in life by places and people, hey, this stock's amazing, buy it. And, you know, many times you don't hear them say, well, where would you look to buy? And then where would you look to sell? Ask yourself the question, why, when you hear that stuff all out there, why don't they suggest? Now, you know, not saying where, like we don't tell you when to buy or sell, but we're going to teach you. I'm going to show you some things in this video here to show you how to learn yourself where you could potentially buy and potentially sell. Knowing that skill set is very helpful. But think about that when you hear people saying, buy this stock, why don't they ever really talk about, well, where, right? Very important. So what happens in the past of a stock, so you look left in a stock chart, many times affects the future. Look right. So I'm going to show you that in some examples. Price action gravitates near those levels, so watch for rejection areas, breakouts, and retests. Now, zooming out to larger time frames can help confirm major levels of support and resistance. Zooming in for short term can give you more of those short term areas. Now, most brokers have drawing tools to be able to draw support and resistance. I'm going to show you on a bunch of charts. We're really going to get into it soon. So you'll see how this stuff can look on a chart. It's important to extend your lines to the right in the future. So when you connect what happens in the past, you can look right to the future and watch price action and see what it does near those levels. And speaking of those levels, pay very close attention to whole and half dollar price levels, right? Support and resistance, many times stocks do a lot of things. They're very volatile near those whole and half dollar amounts. So here's an example of a clean chart. So this is just a stock chart of Apple without really any indicators, kind of a clean chart. Hopefully I didn't ruin anything. Can you guys just confirm if you can hear me in the trade room? I hit a button on my mic, of course. Those blue, so typically you'll see candlesticks as green for bullish, red for bearish, or white for bullish, black for bearish. I have mine on my charts here as blue for bullish, orange for bearish, because that's our colors and we want to be cool, right? So those blue candlesticks are bullish and those orange ones are bearish. Now I have a little note there to say pay attention to that $145 level, that whole dollar amount. So we'll just kind of play it out and just start seeing some examples of what stuff looks like. So if you're new, you might be like, whoa, what are all those lines there, man? Geez, that's a lot of lines. Well, those are some horizontal support and resistance lines. You don't have to have a whole bunch of lines. Remember, everybody's trading strategy is different. I want to just show you this stuff on what it can look like, because if you look to the past and extend those lines out to the future, price action does lots of stuff at those levels. So if you look left on that chart, those peaks, and I drew that circle there, peaks or resistance or ceilings, again, commonly known as, I'm going to start talking about it as support and resistance moving forward, but I'm just kind of get that visual in your head. Ceilings of resistance and floors or valleys at support level. So you'll see a stock will go up, forms candlesticks and patterns. It falls down, support, resistance. So what is a stock going to do? Well, most of us don't know. That's where you have to look at candlesticks and patterns and see what happens near support and resistance levels. So once you learn these candlesticks and patterns over time, it becomes, again, nothing's foolproof, but it helps you to be able to manage your risk more, because a lot of times these patterns are predictable Not foolproof, nothing is, but if you know them and you can kind of drill down, many times you can see whether a stock might be going to break out or break down based upon other charts. This is a daily chart I'm showing you. We're going to drill in, we're going to zoom out, and we're also going to zoom in. So if you look here on that chart of Apple, still keep an eye on that $145 level. And then you'll see kind of like I have those arrows, support, resistance. Well, you know, from this chart, I don't know what it's going to do, but I know at the moment it held support on a daily chart and it's getting up near resistance. If it breaks out of resistance, then that kind of that red area, well, what's it going to do up there? Well, we don't know. If it goes up that area, then we're going to look at those lines, right? Support and resistance. So just showing you guys, you know, horizontal lines right now. We're going to get into some vertical ones in a bit. But right here, what happens in the past affects the future. So when we kind of drill in there, you see I just kind of connected some of those peaks. This is not, I didn't do every peak and whatever. I don't want to go crazy here, but see those arrows, how they extend to the right? And you see how I have some area open on my chart? Well, the lines extend to the right. It's an open area out to the right. So now when you see that circle there, well, what's price going to do? Is it going to go up and hit resistance? Is it going to fail? Is it going to go up and break out? Is it going to trade sideways? I don't know. We're going to watch and see. There's a strategy, depending on your strategy, to tailor and fit different time frames, your level of patience, your level of lifestyle, you know, so everybody, again's trading strategy is different. So right here, I'm going to talk about a few of these patterns, not all of them. I'm going to show you some of these ones on charts. You can come back to this and screenshot it, but we're going to talk about some hanging man, shooting stars, rising wedges. I'm going to show a lot about rising wedges, double tops, triple tops, and then also head and shoulders. So you can see how this stuff's very useful. I can't recommend enough to put this stuff on the back of your computer and just stare. Like, this is stuff at least while you're learning. If you have it in your background of your like subconscious, conscious, looking at this stuff, even if you're studying our courses and you're even going through a beginner's course, having this stuff on a background and just kind of seeing it when you go to your computers is very helpful. So this stuff, I wish there was a neat. It's kind of like, I use the analogy of, remember those magic eye pictures back in the day? I'm 43, depending on how old you are. Remember those pictures where you'd stare at them? There's a bunch of dots and someone be like, oh, that's a mountain in the background. You'd be like, I don't see a mountain. I'm staring at a bunch of dots. This is annoying. And like, no, look, just let your eyes adjust. Let your eyes like focus in, focus out. You're like, and then you take those pictures and you want to punch it. You get so angry. And then like after like time goes by, eventually, if you're patient enough, you're like, oh my goodness, I see the mountain. And then you're telling everybody, I see it. Look at the mountain. Well, it's kind of the way candlestick patterns are. Over time, they take a long time to learn, but when they hit you over time, you're going to be like, you'll be out in nature and you'll see, oh wow, those two trees, those are a double top or a triple top, or those trees or those mountains over there, that's a head and shoulders pattern, right? So that's stuff you will learn over time, but there's no quick and easy way to do it. You got to look at the stuff every day. And if you want to be a successful trader long term, there's no shortcut to success. You have to take the time to learn this stuff. All right, here's a couple bullish patterns we're going to talk about too in these moving forward in the slides I show you. Hammers, double bottoms, so many patterns to learn, but we're going to talk about some of them. All right, angular support and resistance, otherwise known as trend lines. So what you want to do is find as many angular peaks and valleys on a stock chart as possible. Peaks, again, known as angular resistance or ceilings, and valleys are known as angular support or those floors or base levels. So trend lines, angular support, angular resistance. Angular levels form trend lines, and trend lines help to show a stock's overall direction, short or long term. Nothing's foolproof, but it helps to kind of give you a guide. Zoom out to larger time frames to confirm major levels. typically kind of swing traders, long-term traders zoom in to shorter time frames to confirm short-term trends for day traders. And they help you to decide if you're going to enter or exit a trade based on your trading style. I put that in quotes there because in our beginner's course, it's all about helping you to find your trading style. And trend lines and horizontal support and resistance levels work on every chart time frame, but it's all about what your trading style is, right? You're going to look at different chart time frames based upon your trading style. And you want to use drawing tools in your broker platform to draw trend lines and extend them to the right, which is, again, the future. Trend Spider, can't say it enough, great automated tool for drawing trend lines. So, if you want to learn, you can do them yourself, or you can use an automated tool and kind of tweak it to fit your trading style. Pay attention, very close attention to when price is near the base of trend lines, those support levels. Very important. So you'll see right here a chart that's a rising wedge pattern. And you'll see there's multiple angular connected peaks, which is those resistance levels and valleys. So angular support, angular resistance. And you'll see that trend line is a angular support, very important. You'll see price on Apple here bouncing off angular support on that trend line. So if you're bullish, you want to see it hold and push up. But if it pushes up, you got to look up top, and those levels out in the future, those would be resistance. So when we zoom in, now we zoom into this chart here on Apple, and you'll see there was a double bottom off angular support off that trend line. See those two green circles? But you want to watch that white line above as resistance if it goes up. You'll see I circled where price is, but we don't know where it's going to go, right? Is it going to go up or is it going to go down? Well, that's where we got to watch price action, zoom in, zoom out on the charts. And you'll see I have a head, I circled a head, a left shoulder area, and then I have right shoulder resistance. Because if price goes up to that area, it doesn't mean it'll form a head and shoulders. It just means now you're getting up into resistance. And then if it goes in that area, is it going to go above? Is it going to trade sideways? Is it going to fall back down? If it falls down, you have that angular support level. If it goes up, you have angular resistance. So that's future resistance. So zooming in again, talking about patterns. So is price going to form a double top failure, or is it going to form a head and shoulders? So if it goes and forms a head and shoulders and fails, then you can see, you look at those levels of support resistance. You can do horizontal support and resistance lines here as well. But if it goes above that right shoulder area in that previous slide, is it going to go up? And then if it hits those lines, that circle up top there, if it fails there, then you have two tops. That would be a double top that could fail. Doesn't mean it's going to fall all the way back down, or it could go and break out. So rising wedges typically are bearish and they fail, but it's a matter of when. Many of times also rising wedges break out. So patterns are not foolproof by any means, but this is kind of how you start breaking it down, support, resistance, patterns. Very, very important, because you see what happens in the past. You see how it affects the future. How do you draw these lines? You learn candlesticks. You connect those peaks and the valleys, which create those very important support and resistance levels, which helps you to be able to manage your risk when taking a trade. All right, so zoom out. Many a times when you zoom out on the larger time frames of a chart, if you go to a weekly or a monthly chart, you'll be able to see a bigger overall perspective on what's happening long term and confirm trends. So maybe, you might be looking at a bearish pattern short term, but it's actually bullish long term. So swing traders, long-term traders tend to look at larger time frames. Again, everybody's trading style is different, so it's not only that way, but short-term and day traders also look at them to kind of confirm those breakout and breakdown areas of charts. So when you zoom out on Apple, now we go to a weekly chart. It's still a rising wedge, right? And you can see price is bouncing off that angular support or that lower trend line. When we zoom out again to a monthly chart, as of right now, it's still a rising wedge pattern, right? So it's holding support. If you're bullish on Apple, you want to see price hold and continue up. Now, again, when I say bullish on Apple, are you bullish weeks and months out? Or are you bullish days out? Or are you bullish several minutes out? We're going to get into that. Zoom in. Many a times when you zoom in on the smaller time frames of a chart, let's say a 1 minute, a 5 minute chart, you'll be able to see what's happening on a short-term perspective. So you might see bullish reversals or bearish reversals. Now, typically, short-term charts are for day traders or short-term swing traders. That's for active trading. But then when you go to, if you're a swing trader or a long-term trader, you'll drill in on those shorter-term charts to get entries or to take profits, right? So it's not only short-term and day traders look at them. It's, again, taking your trading style, and you always want to get your best entry as possible, right? So you don't want to just sling money and be like, oh, I'm bullish on this and let me just buy it randomly. The stock chart might not be at the right time. You want to buy it low at those support levels, right? Again, this is the stuff we teach you guys every day in our trade rooms. All right, so now let's zoom in on an hourly chart of Apple. You'll see there's a rising wedge happening inside of a possible head and shoulders, right? Now, there's a right shoulder happening on that hourly chart. If it fails, then you got to watch that lower trend line, right? So if it breaks that lower trend line, then you have a break of support, and then you look at those areas below as support to see if it holds. That doesn't mean just because it's green, it doesn't mean to buy. It means if it falls, you see what happens at those support levels, and depending on what trader you are, it may be an entry if it holds support, potentially, depending on your trading style. If price gets and breaks out of that right shoulder area, then you're going to look at the top and see, okay, look where that head is, right near, is that coincidence? $145, whole dollar amount. If price goes up to that level, if it can't hold 145, that whole dollar amount, that could be a double top failure. And then you would look at those trend lines or those areas below as support and see what price does. Does it hold if it falls? Or, again, this is a rising wedge. If it holds these levels, it could go and break out, and then it could break out of that double top. It could form an ascending triangle, right? Other patterns I haven't even talked to you about. So that's where you watch price, and then you learn these levels, and then you determine and you put a trading strategy behind it, right? You see how there's like so many clues, and like over time, when I show you this stuff, even in this video, you might start seeing stuff. Oh, okay, see that peak. Oh, there's one over there. Okay, I can see that head. I can see that left shoulder and right shoulder, right? So you can be aware of it. Now, again, it could be analysis paralysis, and you could start seeing stuff and then think it's going to do one thing and it does another as well, right? So day traders, they typically tend to watch those shorter term charts. You'll see here a 5-minute chart. Now that gray shaded area, this is the Thinkorswim platform. That's the pre-market on every, not every platform, but most platforms should have the ability to have a pre-market chart or be able to have pre-market to see price in the pre-market. But you'll see you can map out now day trade. I didn't map out all the levels there, but if you're a day trader, you map out those pre-market support and resistance levels. And then when you go to that black area, which is market open, then you see what happens with price at those levels. And you'll see that pre-market low. You see that little, kind of right down where it says pre-market low, right to the right at open, you'll see that volatile candlestick right back down. It bounced and then it ripped up, right? Now, this is, day trading is where you got to be, depending on your strategy. I'm not going to say don't trade the first few minutes of the market. Just be very cautious, right? Volatility, lots of volatility. Some day traders absolutely love to get right in if they see patterns forming. Just be aware that those first few minutes of the market, 5 to 15 minutes, very volatile many times. But you'll see, just want to show you the pattern, right? Right at the bottom, price went right to that pre-market low, bounced right back up. What did it do? It broke above that pre-market high, went up, and it created a market high. So a high at open. So what's the high of day? You'll see that high of day was right around that 144.70. What did it do? It showed a reversal, came back down. It retested that pre-market high. It failed. It went down not to quite to as far as where it was in pre-market open or pre-market low, but it went right back up again. No coincidence to where that other circle was in the pre-market, came right back down again. And then what did it do? It held support, right? That little zone there. And then it started going up, and you can see just price goes up and down on those support and resistance levels. And then you can kind of connect those intraday trend line, and you can see how price held that trend line support right around that 144.50 area. So then when you look at that and you can say, okay, well, what's price going to do? Is it going to go up to pre-market high? Is it going to form a double top failure, or is it going to go and break out, right? So that's where, again, that's a 5-minute chart. Do you drill into a 1 minute, 15 minute, 1 hour, 4 hour? Again, everybody, it's all based upon your trading style. All right, so day traders many times will watch 1 minute charts for scalping or trading short-term trend lines and spotting reversals. I didn't do every trend line here. I'm just kind of giving you examples, right? Just kind of see these little channels when you connect the peaks, connect peaks and valleys, peaks and valleys, peaks and valleys, angular support, angular resistance. You see, just kind of finding those little channels. Well, day traders many times will go in there. They might use a 1 minute chart and trade, like, say, bull flag breakouts, right? When price goes up, retests, they'll trade breakout areas, right? But you'll see right here, right around that 144.70, which is high of day at market open, you see those 3 peaks. Well, it formed on a 1 minute chart a triple top failure. So price could not break. It had 3 attempts to try to break that 144.70 area, and it failed. And then you can see I'm showing you there aftermarket $145. I'll show you guys that in a moment. And again, you'll say, like, hey, be careful trading aftermarket. Why do you have that chart up there? Well, don't worry. I do say always be aware of fake outs and end of day trading. So you got to be very careful end of day. You got to be careful trading just in general. But you see what happened? There was a triple top failure. Price came down, and then you had a double bottom bounce. And then it went right up. And what did it do? After market, it broke high a day. And then look, it went up to 144.95. No coincidence, right? And then it pulled back down. And then you got to say, okay, now what's it going to do? Now, first of all, it's after market. Be very, very careful with that stuff. But just to show you, see that support, resistance, see those trend lines, connecting those peaks, connecting those valleys, being aware of those whole and half dollar amounts. So this is the stuff to learn and put together over and over and over, So the more and more you look at this stuff, the more it becomes familiar. Zoom out, zoom in, learn your trading style, and then, again, nothing is foolproof, but you got to be aware of these patterns and then learning how you put your strategy behind it to capitalize on it when trading. So reversal patterns, right? Lots of different reversal patterns. Let's take a look at the morning star pattern, a 3-candle reversal pattern. So you'll see here, on going back to a daily chart of Apple, we're going back to that hammer is a reversal pattern as well, but we had that on our bullish one. So you'll see a hammer is a bullish 1 candlestick reversal, and you'll see there was a hammer right off that angular support level, that lower trend line. Pay attention to this stuff. When price does that and it holds, just very important clue. Doesn't mean it's always going to go up with a hammer, but you start seeing those little-ish candles. I like smaller ones for reversals. That's something, if price falls to that level, if you went long or took an entry on a position like that, depending on what you were trading, you might use a candlestick close below that level as your stop. Again, everybody's risk management is different. I typically like smaller candlestick risk rather than larger, but it's all depending what your trading style is. If you want to, if you're doing an option, a short-term option, are you doing a spread? Are you doing shares? Sometimes it's better. I'll say better depending on what your strategy is, but you might have the ability to risk staying in something with a candlestick close below a certain level if you're in shares rather than options, right? So that's where, but it all depends again on what your strategy is. Now, Morningstar pattern, you can see that was confirmed. You'll see that hammer, there's a 3 candlestick pattern, hammer, and then a bullish candle, that 3 candlestick reversal, it held support. Now price is going up. Now you have that lower trend line. Is it going to continue up, or is it going to fail? Right? You can see just kind of those previous levels that I was showing you. This is where you kind of zoom in, you zoom out, you learn these patterns, learn these trend lines, and how this all comes together. Bullish reverse or bearish reversal candles happen near the high of day. HOD is high of day. You'll see there was a double top, 2 candlestick, 5-minute chart. Those 2 candlesticks could not break high of day, and then price ended up failing. So that was a double top. Some might call it tweezer top, but the 2 candles are not next to each other. Still tweezer top, double top, right? That's where I say tomato, tomato. It's still telling you the same story. Volume, very important when trading. It shows liquidity and the level of interest in a stock during specific time frames. Pay close attention to large volume spikes up or down. These are clues that can be helpful in determining potential reversals or trend confirmations. Now, news can be a catalyst. It's very important to trade highly liquid stocks, stocks that you can get in and out of that don't have huge spreads. And you can use, obviously volume is important on multiple time frames, especially with your trading style, right? Volume on one chart might not be as important on another chart. Again, depending on what your trading style is, pay attention to those volume spikes. So here's a daily chart of Apple. You'll see, I said average volume. So you can see the average height of those candlesticks kind of trading sideways. And then you pay attention to those huge volume spikes. And many a times you'll see big spikes in volume, when a big bullish or bearish move is about to form. So pay attention to those large candlesticks and those volume, or those bigger, larger volume bars when, based upon your trading style. So many times, many important things happen, reversals to the upside and also to the downside. And it's confirmed many times by volume. Moving average lines, they show very important support and resistance levels, both on short-term and long-term charts. Now, many traders pay very close attention to them, but it's important to know that they're lagging indicators. They're very helpful, but price action still is number one. But, they're very popular, and some of the most popular ones for the simple moving average line. So there's simple moving average lines and also exponential moving average lines. So EMAs and SMAs. So popular simple moving average lines are the 50, the 100, and the 200. Popular exponential moving average lines, or EMAs, are the 9 and the 20. or the 13 EMA by itself. Those are those momentum indicators, that short-term momentum, day traders, or those people that like to do those kind of short-term trades. EMAs are very popular. But again, traders use different moving average lines depending on their trading style, if they use moving average lines. And again, watch for crossovers, very important, up or down, because they can show possible reversal areas. This is a lot on this chart here, but you'll see on that my blue line is the 9 EMA, the red line is the 20 EMA, that purplish / pinkish line is the 50 SMA, and that white line is the 200 SMA. So it's important to pay attention to what price action does near the moving average lines. And when it's far away from them, remember, stocks are like rubber bands. When a price gets overbought, where it's overextended to the upside, or oversold at the very base levels where it's too far. So when it's too far away from those moving average lines, price naturally wants to gravitate back like a rubber band. It can happen fast or it can happen slow. Now, many times, at these moving average lines, you'll see reversals and pullbacks, but watch volume as well for confirmation. So you'll see a lot of stuff happening in this chart. This is something you want to kind of go back and look at, but you'll see when price is far away, how it pulls back, confirmation with volume, patterns, triple bottom patterns, moving average crossovers. Watch what happens near that 9 EMA and that short-term momentum. When price sometimes it drops below, let's say a 9 EMA, and then it bounces off that 20, right? So very important to see when you take what I was showing you before without moving average lines, and then when you put moving average lines on it, you'll see many a times, look at what happens near those lines. And now you can see I have price circled now. Well, price is kind of in the middle of those moving average lines. So is it going to go up? Is it going to go down? Is it going to trade sideways? I don't know. You got to watch. But there's possible inverse head and shoulders there. Does that mean it's going to go up? I don't know, right? If it does go up, you got to watch that purple or pinkish line, resistance level, right? No coincidence, right around 147, whole dollar amount. Doesn't mean it's going to fail. You just got to watch what price does if it goes up to that level. RSI, Relative Strength Index, shows the overbought and oversold levels of a stock. Again, stocks are like rubber bands. They tend to snap back or pull back to those equilibrium levels when they become overbought or oversold. Many times this happens near support and resistance levels, and it can happen slowly or it can happen quickly, right? So looking at a chart here, again, it's a helpful guide. Nothing's foolproof. Look at multiple time frames, and I put time for strategy is critical, especially if you're in an options contract. Time, that's why I put it up there. Time will help you depending on what the strategy is with your option, whether you're going to stay in it longer or shorter. So you look at those overbought, oversold areas. So when price gets overbought, it's way up there, and you'll see many times it pulls back, and then look what happens when it's overbought or oversold. Overbought, many times it pulls back down to those moving average lines. Oversold, many times it goes back up to those moving average lines. So those moving average lines, when it goes up, that ceiling or resistance, does it hit the ceiling and reject, or does it go when it break out? When it's overbought and it comes down to those support or floor areas, does it hold support and go up, or does it end up failing, right? This is stuff you got to learn when you put the candlesticks together, learn the patterns, trend lines, put it together with moving average lines. RSI is a guide. Remember, all of these indicators are a guide. Nothing is foolproof. So candlesticks, I can't stress it enough. They're the name of the game when trading. There is no shortcut to success if you want to become a trader. It takes studying, at least an hour or two per day. Hard work, discipline if you're going to make it long term. Candlesticks and patterns, they make up the foundation of the stock market, which is price action. And price action is king. Everything else comes behind price action. learn price action. It's the most important aspect to trading. All right, guys. So if you want to learn candlesticks, we do this stuff live every day in our trade rooms. So we have our Discord, which is our central hub for our trading community. We do live streams. We teach price action, candlesticks, patterns, horizontal, angular support resistance levels, RSI, moving average lines, all of this stuff we teach every single day. It's the best way to learn this stuff live over and over and over again, right? If you can't catch us live in our trade rooms, we do have replays for our yearly members. So watch the stuff live. Again, it takes time. You know, if you want to become a successful trader, you got to put in the hard work, just like you would any career or profession, right? Study, practice, and our trade rooms are a great way to learn this stuff because, again, we teach you this stuff live. We have a penny stocks room, a large caps room, futures room, and then you can take what you learn in our ebook and in our courses, practice it live in a paper trading account first. We always recommend that first, and then slowly scale your way up with real money, right? And then if you have questions, that's the best part of our Discord is you can ask them in our Discord, right? So you can go to any of our trade rooms and ask questions, or you can go over to our beginners questions channel. So you can ask them in our rooms. But if you're, hey, I don't want to ask live in front of other people, we don't bite. We're not, don't be bashful. But, everybody is a beginner once. We understand that. But if you feel more comfortable, we have a beginners questions channel where you can just go and ask them over there if you'd like. And so last but not least here's where you get access to our ebook and wallpapers. Depending on where you're watching this, if you're watching this video in our beginners course, we'll have it right in our courses section under candlesticks. If you're not a member yet or you're not taking our courses, you can go right over to that link, bullishbears.com/candlesticks-patterns. And this is where you can get our ebook, our wallpaper backgrounds. You can see we put a lot of effort into those wallpapers. And this is where you get access to our candlesticks courses. But again, please go slow with learning candlesticks. They take time to learn. It's best to take, again, our beginner's course first if you're brand new. Then, once you've determined your trading style, because that's what we're trying to teach you in our beginner's course, help you to find what your trading style is, then you want to go into the trade room that is a fit for you, whether it's our penny stocks room, our large caps room, or our futures room. Then you want to take the courses that go along with your specific trade room. You don't need to take all of our courses, just the ones that go along with your room. So do our beginner's course first, then the courses that go along with our trade room. Then you slowly get into candlesticks. So put our wallpapers up, look at our ebook casually along the way, but don't jump into candlesticks until you really have kind of grasped and get a foundation of what your trading style is.